السلام عليكم ورحمة الله. بسم الله والحمد لله والصلاة والسلام على رسول الله. اللهم علمنا ما ينفعنا وانفعنا بما علمتنا وزدنا علما. Hello everyone, this is Liquidity Club by Ahmed Shawi. Today is Tuesday, the 10th of December 2024. Today I'll be breaking down a trade that I took in the New York AM session. So let's get started. It will be in a top down breakdown from the higher time frame all the way down lower to the 1 minute time frame chart. I'll go over everything that made me take this trade and I'll try to explain it in the most simple way as possible. So let's get started. Starting with the daily time frame chart, I start with the daily time frame chart, narrating and pretty much highlighting where is my drawn liquidity, what is the price level that I think price is going to be trading to. This is the day that I traded in, and I'll be telling you how I anticipate price trading down lower into the range here. We have formed a high here, as you can see. Price retraced down lower after forming this high. It took a previous external range liquidity, another high like this, and we have seen a retracement down lower into the fair value gap, which would be considered as internal range liquidity. After the retracement into the internal range liquidity, price traded up higher into the external range liquidity right there. So it has traded to that high right there. And after it has traded to that high, we've seen some consolidation here. Friday, Monday, yesterday. I wasn't expecting much of yesterday because we didn't have any news drivers. Going into today, we just had one meeting at 10 a.m., I believe, and this was utilized to pretty much send price down lower to the downside. Anyway, so price formed some kind of consolidation here. Tuesday, I was expecting price to trade down lower at least. Price can retrace tomorrow, it can retrace lower towards this favorite gap, this SPC, or even this SPC here, deeper to this SPC. This is all considered internal range liquidity. But I was just looking for the low-hanging fruit, and low-hanging fruit pays. You don't need to be aiming for the absolute maximum that you can retracement that you want to aim for. No. And when you're trading from the internal range of liquidity, let's say you're trading from here, you're trading this fair value gap as the internal range of liquidity and aiming for the external. You could be just content with this fair value gap right there. Price can give you the exit here and you can be content with it. You don't need to hold until this price liquidity. Although based on what you know and based the experience and knowledge that you have, you know price is going to be driving towards that buy side liquidity. But it doesn't mean that you need to be holding those positions until the buy side liquidity, because anything that can happen in the markets. Price after reaching to the low hanging fruit, it can just, you can see how after price has traded to that favorite gap as means of low hanging fruit, we've seen a deeper retracement here on these 2 days. We've seen deeper retracements. Some people may not be able to live with this kind of retracements. So always, if you're not gonna be pretty much terminating your positions at the low-hanging fruit, at least take some partials, and you can leave a runner towards the external liquidity or the drawn liquidity, the terminus that you're aiming at. But in this case, it was a trade down lower. I was expecting lower prices today. This is Tuesday's trading. So what I was aiming for, you have this favorite gap, the low, the midpoint, which is the consecutive ultimate, and we have the high, and inside the favorite gap we have this low, which is what I was aiming at. This is Friday's candle, so we have Friday's low. So this is pretty much a zoom in version. So if we zoom in here, it would be like this. This is the favorite gap right there. You can see how price traded down lower to the consecutive of that favorite gap, and we've seen some reaction here. I was aiming also, this would be my target. I was aiming at previous days previous days sell side liquidity. I was aiming at Friday's sell side liquidity, and we have this gap, we have this wick right there, discount wick. I was also aiming at the midpoint or the consequent of that discount wick. The midpoint of that discount wick is also happens to be the high of that favorite gap, which is this candle's low. So there is an more emphasis on this level. The levels are mentioned here. You can see the sell side liquidity, the discount wick, and the Friday's low sell side liquidity as well. So these were my targets. I'm looking from the higher time frame. You might mix things up on the lower time frame, but this is why you have an outlook from the higher time frame to keep you focused on what you're aiming at, on what you're looking for, what you're targeting. So if you're going from the high time frame, you pretty much have an idea where price is likely to reach to. You're pretty much narrating a narrative. You're narrating a bias that might potentially play out, might potentially pan out as you're looking for. Price might, it can just reverse and keep running up higher. But based on my experience, based on my knowledge, based on what I'm thinking about the markets, these are my drawn liquidities. So I'm drawing these levels, I'm drawing these targets, these drawn liquidities before price even trades. So by the opening of today, when price was opening at 9:30 a.m. New York time, I've already drew out these drawn. I have already drew out these levels, these drawn liquidities, and I was aiming at them. So whenever price presented within the time windows, whenever price presented areas or potential setups, I would take these setups based on confirmation list that I'm going over. And if it does go and pass my confirmation list, I'll be able to take the shorts. Otherwise, I might expect price to run up higher even more, take out more buy side liquidity before reversing and starting the sell program and spooling to the downside towards the levels that I'm looking for. So since we've now pretty much planned out that we are looking for lower prices, I'll go over how I managed to short, aiming at these levels that you see right there. The previous day's low, which is Monday's low, the Friday's low, which is last week's Friday's low, and the encroachment of this discount wick, the midpoint of this discount wick, which is Friday's discount wick. So dropping down to the 4-hour time frame chart, there's also more things that I'm aiming at here at the 4-hour time frame chart. So we have these targets, but you can drop down to the 4-hour time frame chart. You can see that we have here uh, pretty much a zoom out version. You can see this is Friday's low, this is Monday's low, previous day's low, and we have London's low right there. I'll be dropping down and showing you London's low on a pretty much a more clear version, so just bear with me here. We have this 4-hour favorite gap. I'll be taking also profits at the 4-hour favorite gaps. I'm always looking for partials. This is, you gotta pay yourself. This is what matters the most. Nothing matters in trading if you have your analysis right. I could have my analysis right, but still I could be losing money because I'm not paying myself. You have to pay yourself. Whenever you get the chance to pay yourself, you have to take the chance to pay yourself. Don't expect price to just go to the intended level that you're looking for. It's not guaranteed, it's not promised to you. So why take chances? You must always take partials. Whenever price presented you a good partial that you could be taking, just take chance of it, take opportunity of it, seize the opportunity and take partials out of the market. Bank some bucks out of the time, the energy, the focus that you put into the markets. Your time is not free, so you have to appreciate your time, appreciate your energy, and take something out. I hope I made the point clear. So you can see price here since London, we retraced here into the favorite gap, the city, a bit of drawing outside the lines. It's absolutely normal. It's just trying to indulge more traders. It is trying to do the damage here with the wicks. And this is pretty much it. You can see the new week opening gap, how price is reacting at new week opening gap. It's an old new week opening gap, by the way. It's about a month old here. So we'll have a bit of a more zoom in price action. You can see this is the 4-hour time frame chart. This is London's low. I'll be showing it to you on the low time frame chart. The 4-hour favorite gap, which is the BISI, buy side imbalance, sell side inefficiency. As you can see, when price has created the BISI, it is inefficient with the sell side delivery. And you can see how price traded down lower, made it efficient, made this area that is inefficient with sell side delivery now efficient. It has panned out as sell side delivery, so now it is officially efficient. So, and then price just continued running down lower into the levels that we're looking at. Going into the 5-minute time frame chart. So this is where we get into the nitty-gritty, where we get into pretty much the specifics. It's gonna be getting a bit more advanced. So I'll try to go I'll try to go slow and in a simple way where I'll try to explain everything. If you have any questions, do not hesitate to do like write a comment down below so I can pretty much uh, create more videos and share what do you mean by these questions. So I'll try to answer your questions in a follow-up videos in the future. So anyway, you can see these are previous day's low. Friday's low are not presented here on this time frame chart, but you have already showed it to you here on the 4 hour time frame chart. So the 5 minute time frame chart showing previous day's low, which is Monday's low. We have London's session. You can see how price created a consolidation here and started turning up higher. We have the 4 hour favorite gap, which we took some profits at. You can see that we have sell side liquidity here, sell side liquidity here as well, and we have sell side liquidity here as well. This sell side liquidity is like presented overlapping with the 4 hour favorite gap, so it is going to be a good place so you can take profits at. Anyway, price just traded down lower, tanked down lower, touched the constant of that daily favorite gap. You can see how it's respecting the midpoint of it. The constant, you can see the bodies are respecting it. The wicks are just doing the damage here, but it is respecting it and then it's retracing. And that's where I just took the pictures here at this time, which is 4:33 p.m. New York time. So dropping down lower to the 1 minute time frame chart is just the same as the 5 minute time frame chart, which is this is London. Just trying to show you everything, and we'll get into the advanced. I'll pretty much zoom in and I'll show you everything. So I just want you to see the whole day. You can see this is a classic sell day. Price opened, traded up higher as a means of manipulation, traded down lower as a distribution, and then reset where we close near the closing near the low of the day. So let's get down. Let's zoom in pretty much. This is where price. I'm zooming in here to show you the pretty much the entries that I took. Price, all of this, I'm not interested in all of this. Per price, why am I not interested? Because I could have been shorting this and expecting no price. I'm going to be expecting price to trade down lower to the targets that I'm looking for. But here, it is not even at 9:30. Price opened here at 9:30 right there. And we started seeing price just starting up higher. I'm not going to be selling when price is starting up higher. When it presented them to me that it's likely going to start trading down lower, it's reversing into the sell program, and it's going to be spooling to the downside, I'll be taking my entries, shorting it. But I'm not going to be shorting based on, oh, price is just running up higher, let me short. No, it could be just, it can continue running up higher for the rest of the day. So there has to be a list of protocol, a list of criteria that you follow to pretty much evaluate it, to qualify the setup for you to be shorting it or longing it based on the narrative of the high time frame chart. So let's zoom in here and show you everything pretty much about this trade. You have this sell side liquidity right there, which is these low right there, this low and this low. So these are the lows here. Price pretty much as I've told you here at 9:30, rallied up higher, deeper retracement here, just forming sell side liquidity, typical lows, and then it just continued running up higher here. A bit of a retracement, took out the buy side liquidity right there, and then jammed down lower. Jamming down lower, we have the volume imbalance right there, and we have the bearish breaker. I'm choosing just this candle when you have to choose all of these 4 candles, but I'm just showing you this candle to make the charts cleaner. Just this last down close candle. You can see our price retracing, respecting the midpoint, which is the mean threshold of that bearish breaker, and jamming down lower. We have seen price after trading down lower, you can see retracement into the bearish breaker and the bearish order block right there. Trading down lower one more time, forming a favorite gap here. A SIBI, sell side imbalance, buy side inefficiency. It's inefficient with the buy side delivery. Price retrace here, a bit of coloring outside the lines here, which is normal. You have to expect some kind of coloring outside the lines, which is normal in trading. Sometimes you will see this, and other times it will be clean cut. It will never trade above it. So you have to expect these kind of conditions in the markets. You cannot expect the market to be perfect every time. Anyway, but we have a narrative in mind. So price can be tracing deeper into the bearish breaker, into the volume imbalance, but we have a narrative in mind. We have a narrative that price is going to be trading down lower into the drone liquidity that I've mentioned and the levels that I've mentioned earlier this video. So price pretty much walked out here at this favorite gap and then jammed down lower. We've formed an inversion favorite gap. Price retraced into the inversion favorite gap, respected it, a bit of coloring outside the line here for the wicks, and then started running down lower. We have a favorite gap here. You could be looking at this as a breakaway gap, breaking away from that favorite gap. I've added more positions here as an institutional order flow entry drill. It just touched the low of this favorite gap, the city, and just jammed down lower, be targeting this sell side liquidity and this sell side liquidity as well. And we have this 4-hour favorite gap. I can show you here this 4-hour favorite gap. I've took some profits here at the high, which is actually as well as this low. So this low and the favorite gap high are pretty much in the same level. So the 4-hour favorite gap high, the midpoint, and the low. And there are still more targets that I'm looking at, which is the previous London's low, previous day's low, discount wick encroachment, or the midpoint of that discount wick of Friday's trading day, and we have Friday's low. So all of these targets are still yet to be reached. We have just reached to these targets within the AM session. You can see, sorry, you can see how price traded down lower within the time, within the AM session, and then we approached after the afternoon. So you can see these are the entries I entered here based on that bearish breaker. The volume balance here traded down lower. A bit of trade, another trade here at that favorite gap. I added more positions here, and then price traded down lower. The institutional order flow entry drill, I added one more position, and I pretty much held. Took some profits at this side liquidity. Took more here at the other side liquidity. I took some at the favorite gap high, the 4-hour favorite gap high, and pretty much price had a retracement here to that favorite gap and jumped down lower into the midpoint or the constant portion of that favorite gap. At the 4-hour favorite gap, I took some off here, and then I took some off here at the low of that 4-hour favorite gap. Price had a retracement here. You can see if you add them, there are still more short positions in play, and I'm going to be showing you the full picture later on, so you can add the position and you can see that they are even. I'm not holding position and keeping position for you to just pretty much see that I'm taking some trades. No, everything's going to be showing to you and everything's going to be clear. So let's show the rest of the day. We've stopped here where price has traded down lower to the 4-hour favorite gap low. It attacked it, and we took some profits there. We've seen some retracement here. We're approaching here the lunch period. It's from 12 to about 1 o'clock. We have lunch break. The lunch macro will run where we have, it's likely that it's going to run on some kind of a buy side liquidity. So we formed some lows. You can see how price traded now lower. Formed some lows here that are yet to attack London's low. So pretty much they're giving some reason for retail traders to respect it as means of support that they can go long at and set their stop loss just at it or just below it. And price did trade up higher, took out this high. A lot of traders are thinking that this is a bullish breaker that they can trade, that it's trading also to that favorite gap. So a lot of people who potentially trading it as long here, but we have an idea, we have a thought in mind about the higher time frame narrative. So we cannot just trade intraday here longing when the higher time frame narrative is short. So we pretty much stick to the idea. We stick to the narrative that we want to see lower prices. Every high that's going to be attacked is going to be rejected and will break through the lows. You can see how price formed highs here. It attacked the highs. It wasn't able to attack it more than this. Why it has reached here above this high? It has traded to that bearish order block, and you can see it never closed above the mean threshold or the midpoint of that bearish order block, and then we tried to trade it down lower. Any run above the highs here, as you can see, it's just rejecting, it's taking the buy side liquidity to continue running down lower. So in sell program, pretty much to keep it short for you and pretty much clear, in sell programs we expect price to reject the highs and break down the lows easily. You can see it's always rejecting the highs and breaking through the lows easily. Anyway, so price rejected the highs here. You could be looking at every time price reject the highs, you could be looking at this as an entry for total stop entries. I'm not trying to suppose not trying to force you into any entry mechanism. I'm not trying to to force you into anything. I'm mainly doing this to remind myself of the trades that I'm taking. It's not for you. I'm not doing it like primarily for you. I'm doing it primarily for me and for my children. That's it. I'm not doing it for anyone else. But you are more than welcome to see what is going inside my head when I'm looking for trades. And for your info, I don't have children. It's just for future children's. Anyway, so price bit of retracement here. We're approaching. We don't know. Currently, we're in like, oh here, price traded down lower, took out London's low here, as you can see, and then we see some reaction, which is absolutely fine. After price takes out a drawn liquidity and reach to a price of a drawn liquidity, we expect price to react from that level. We have seen price reach to the London's low. We've seen some reaction to it, trading to the bearish order block mean threshold, and then slowly trading down lower. Another formation here, we formed the lows just near the previous day's low, which is Monday's low, to trick retail traders that could be traded as support. And we've actually took out this high, so a lot of people would be looking at this as a shift in the market structure, or the market structure shift, or for retail traders they will be calling it the change of character for some reason. But yeah, this is where retail traders will be pretty much wrecked. They will get wrecked here. So price just continued running down lower, taking out previous day's low, reaching to the discount wick, or the midpoint of the discount wick of Friday's trading, and reached to the Friday's low. And this is where I took all of my positions. This was my terminus. I could be holding some positions to the midpoint of that favorite gap, but I'm content. You have to be content. When you're going into these markets, you must be content with what the market is presenting to you. You cannot pretty much force your will against the market. The market can pretty much do anything. So you cannot force a trade, you cannot force a TP, you cannot force a position to go to specific levels. You just have to work with what the market is pretty much presenting to you. You have to be willing to be flexible in these markets. If you cannot accept the fact to be flexible, if you cannot accept the fact that you're going into the unknown, you're going into something with a high degree of uncertainty, what are you going to face in these markets? It is not clear. Every day we're facing uncertainty, and you have to be comfortable with it. If you cannot be comfortable with being uncertain, unsure, you're going into the unknown, you're just walking with what the market is presenting to you, then trading is not for you. You're better off investing that energy, investing that time, investing that money into something else that will be more fruitful to you, because trading is the most difficult field in the world. You're pretty much competing against the smartest people. The smartest out of the smartest, like pretty much the elite of people. The smartest people are trading this, and they're all working their way to take your money. They're all working their way to take money from your trading account. So it is up to you if you're willing to let them take that money, and your psychology plays a big role in doing that. So you have to be willing to go into uncertainty, and this is why the having a model, having pretty much a list, having a criteria, having a protocol that you follow every single day to keep things clear, to keep things pretty much precise when you're doing it, to pretty much stop the ambiguity, to don't have, you will not have ambiguity, you'll not be your trading will not be ambiguous. If you have a trading plan, if you have a model that you're following, it will be way much easier. So you're having pretty much a mechanical approach to the markets. You're asking yourself a question: what I'm looking for, what is the sell liquidity I'm looking for? You have to pretty much look for specific things, because you have a list that you're following. It's not you're not attaching or pretty much mixing emotions with your entries. You're not mixing anything. You're doing it based on a criteria. You're doing it based on a protocol, based on a list that you have already wrote before. That's your model. That's your plan. You must follow it to find some success in this field. And I mentioned, I'll mention it again. You're competing against the most smartest people on earth. So if you're willing to play this game, if you're willing to pretty much pursue this industry, if you're willing to pursue this endeavor, you have to be willing to do a lot of things. If you want me, I can be pretty much creating another content, another video on psychology that will pretty much, I believe, will help a lot of people in their trading and how they can pretty much achieve more with trading, because psychology plays a big role in trading. It's majority of your trading is based on psychology, based on your mindset, based on your mentality about the markets, and it's a very small percentage of your technical analysis or your plan or your strategy or whatever you're doing. So enough with that rant. Let's continue. Here you can see that's the entries here, shorting here, and we took some profits here. I've already discussed these profits that I took. We took some profits here at London's low, pretty much holding here at the previous day's low, at the constant the discount wick constant or the midpoint of Friday's trading, and then price we've held until the Friday's low right there. So these are, you can just pretty much add these up and subtract these from what you've got from here. You see that it's an even number, and in here it's just like what, like we took some shorts at a 21,554. Just consider it as 550, and we took the profits here at 389. Let's call it a 3, let's call it 400. That's more than 150 handles in just one trading day. So I'm just gonna keep it there. Just ponder about it, reflect on that idea. 150 handles in one day. If we have something else here, we have the zoom out chart price action of the entries here and the profits that we took. So that is going to be pretty much it for this trade breakdown. I really hope you found this one insightful. I'm trying as much as I can to keep these shorts and not lengthy in time, but I'm trying to pretty much encapsulate what goes in my mind, what pretty much goes in my mind when I'm looking for trades. And this is pretty much the summary of it. There's more to it, but I'm trying to keep it short for you, trying to keep it encapsulated in a time window where you can watch it without being bored. If you have any ideas or of what you want me to upload next, please let me know in the comment section down below. That's going to be pretty much it for this trade breakdown. I really hope you found this one insightful. Until I talk to you next time, be safe. Wassalamu alaikum wa rahmatullahi ta'ala wa barakatuh.